What is going on, investors? Hopefully, you guys had a great day out there. Time to keep earnings season moving right along here on the Investor Channel with another earnings video. This time, a first for the channel and one that I just saw pop up in my comment section so many times. I just had to do this one. We're going to take a look at Merck, ticker symbol MRK. Over the last year, stocks down 5%, year to date down 5%, last 5 years up 38%. Steady dividend payer, pays $2.60 per share. That at the current price is a 3.37% yield. Now, first thing I want to talk about, if you follow the channel, you know that I repeat, I do not invest individually in companies like Merck, at least heavy amounts of money where I get overweight my portfolio or it's a large percentage. So I'm going to talk about that. Okay. First of all, I can still analyze this company. We can still look at this balance sheet. We can still look at their product mix. We can look at the profits, the revenues, the cost. We can still analyze it from that perspective. Just because I almost failed every science class I attempted to pass doesn't mean I can't take a look at these numbers and kind of give you some perspective as an investor. The other thing I can do is, some of you, when I've said this on the channel, you agree with me in the comments saying, hey, I struggle with healthcare companies. Okay. Not a doctor, not a nurse, not a nurse practitioner, those types of things. Well, I'll tell you how you can get exposure to Merck and how you can kind of get your feet wet with this company if you want to build up a position in it but don't want to take the risk. The last thing I can help you with is, look, there's some interesting price action here. And actually, there's a price where if this thing pulls back to, yeah, I'll probably have to break my rule of individual healthcare companies, because price is king when we're talking about these things, and there is a price for everything, and I certainly see one when we get over to the stock chart. Now, first thing I want to tell you broadly, really about I would consider this a mega cap kind of pharmaceutical company. You've got a $195 billion market cap on this one. This is gigantic. So first thing is, if you've never played around with pharmaceuticals, there's certainly many stocks on the speculative side. I've gotten burned many times on the speculative side. I would first make your foray into companies as big as this one, because you're going to be less impacted. Because here's the thing about pharmaceuticals, drug companies, this and that. Take a look at this. This is just for the first quarter here. They've got some pharmaceutical drugs that they sell. Some of these I'm kind of familiar with. Many of these I'm actually glad I'm not familiar with, because it means I don't have to take it. So, but here's the deal is, you've got this change here, and what I've always found with pharmaceutical companies, it's unlike tech companies and stuff like that, where you just kind of have a push forward of earnings and sales and profits. It's always a push-pull with pharmaceutical companies. So some quarters, some years, some drugs, some combination of that can be really good. Okay. You see some drugs like this one's up 57% over the last year in terms of sales, but then you have others that are down considerably over the last year. And then the other thing that you have to factor in is that then they have these mega drugs that are really popular. And so if you have any problem with that, or if it goes generic or whatever the things happen, well, then this top revenue earner all of a sudden starts to decline. That impacts the business even more. So it's a difficult business. In my opinion, these are difficult stocks to kind of predict, but you are saved in essence, because this one does pay a $2.60 per year dividend. That at the current price is a 3.37% yield. So you do get paid nicely while you wait. Another thing is you're not paying a ton for these earnings. 11.85 on the forward PE. Put that in your tech portfolio and smoke that, because that is absolutely beautiful. Okay. So from a valuation perspective, from a dividend play investment, I like this. If you're trying to build a dividend portfolio, and one where you're not paying a ton for that dividend and not paying a fortune for it, like you might with maybe some of these other tech companies out there, well, then you want to focus on companies like this. Now, let's jump into the earnings. I showed you kind of the mix of the drugs. I want to just show you how steady this business is. Here's our statement of income right here. We've got our sales up here. This is 2021, the first quarter. This is what they just reported. Then they give you a quarter-over-quarter view of all of last year. I actually like this. Now, you notice here the change, 0%. So while I showed you they have drugs kind of coming in and out of their sales cycle, well, that all mixed together equaled $12 billion worth of sales, and that's really where they've been at. They had a kind of an anomaly, it looks like, here back in Q2, but we're at that $12 billion run rate for the last 4 quarters, essentially, and for the full year. So a very, very steady business. Now, the other thing that you want to factor in are these cost of sales. They came in at $3.6 billion. That is a little higher than what we've seen, not quite as much as the fourth quarter. We're up 11% kind of on a year-over-year basis from Q1 of last year. You got selling, general, administrative. That's up slightly. You've got research and development, which you'd expect a company like this to just have to continue because you've got this push-pull in terms of drugs coming in and out of the market. You got up 12% on this one. Now, we've got the income before taxes that came in at we'll call that $3.5 billion, right in line. Now, I know it's down 10%, but it's in line with what you'd expect. You also had some of these costs kind of rise during the quarter, so that's what pulled kind of our earnings down. You got net income down here coming in at $3.2 billion. Honestly, it's about where they've been. Okay, very, very steady company. Now, from a dividend perspective, you always want to come down here and look at earnings per share. You got $1.25 on this one. I showed you that they paid $2.60. So they're earning as much in about 2 quarters as they pay for the full year. So this is a company that has some room to grow this dividend, especially if they're able to grow their portfolio of, pharmaceuticals that they can sell to customers. So all things being considered, I like what I'm seeing here. Now, from a perspective of maybe you want to buy the individual shares, we're going to talk about there is a price. If this thing pulls back to this price, and I would give and take $2 or so on that stock price, well, I think you can probably jump in this one just as a singular name. Now, if that's a little too risky for you, if you want a little bit more diversification, I'm not associated with this site. It may not be the best site, but I come to ETF.com whenever I want to find out like what ETFs hold an individual stock. So you put the individual ticker, in this case MRK, up in the search box, and then it shows you ETFs with the most Merck exposure. Take a look at this iShares, IEIH. That has a 6.1% allocation, which means over 6% of that ETF is actually Merck, which is actually a lot, okay? And there's others here on the list that are 5. And I wouldn't necessarily buy the top one on this list. I'd pull up the stock chart. I'd take a look at the expense ratio, those types of things, maybe even the dividend rate on this one, and kind of compare that to maybe investing in the individual stock, in this case Merck, or maybe just buying the ETF. You've got the top performing ones over here. You got the ones with the most shares, but these don't always make a lot of sense because these are just going to probably be broad-based ETFs. Like these are all S&P 500 essentially ETFs that are going to give you a broad base into a lot of things, while they have a lot of shares of MRK, not necessarily going to give you that exposure you want if you really, really like this company. Now, I'm going to tell you what I really, really like is this stock chart. I'm on a weekly view. This thing goes back. I mean, this back on the left-hand side is like 2014, 2015. It's basically a 7-year view. Now, this stock made a monster run. Okay, at the end of 2018, this thing was at $53. And then right before we had that health situation here in the United States in January of 2020, this thing was at $92 per share. So it bolted on a ton of sales. Now, then, like most stocks, down in March, it bottomed in the $65, $66 per share range. And then like most stocks, V-shaped recovery, but notice what we've been doing. We had a high here back at $92 at the beginning of 2020, but we've been making lower highs, okay? Lower high, lower high, lower high. The stock right now is, I'll put a line here so you guys can see this a little bit easier. This line right here at about $73, $74, call it, is where the stock is sitting today. The reason why I put a big old red line right here at $65 is, one, it's right about where the stock bottomed out in March of 2020. It's also a lot of resistance back here at this is back in 2017. So this is 4 years ago. So it's interesting that the stock bottomed out right here at $66 per share. Folks, that is only, if I'm good at math, about 6 to $7 away from where the stock is trading right now. I know that would be a 10% move, but I want to show you the trend on this stock is actually down. Okay, we are in a downtrend. Okay, and until you get above one of these highs that we made back here, well, the downtrend is still intact. And so I would anticipate that if this downtrend continues, you could come down here into the $66 to $68 range, which again is only $3 to $5 to $6 away from where the stock is trading at its current moment. On top of that, as this thing comes back, you're going to get a yield closer to 4%, which is, look, it's a little bit more attractive than where it's at, but that certainly would add some even more value to a stock like this. So I like this one from a chart perspective, not right now. Okay, I would wait until we see some evidence of a reversal. You really need to get above $76, $77 on this one. Okay, and you're going to hit your head on this moving average as you come back up. As you've seen, it's acting as resistance now. This is a weekly view, so this is a consolidated chart, but any pullback to $66, $67, even $68, I'd start nibbling in that anything below $70, which is only $3 and some change away from where the stock is right now. Honestly, I would start nibbling on a stock like this. I'll let you to decide how much you want to nibble on it, how you want to allocate that. Maybe you're better at analyzing these pharmaceutical companies than I am. If you're not into that, I would take a look at these ETFs that give you a fair amount of allocation into this one as well. On top of that, this could be just a dividend play as well. You got a bunch of tech stocks, you got a bunch of speculative stock, you got a bunch of Bitcoin. Well, now you want to build up kind of that steady stream of dividend income. Well, a company like this certainly could play into that. And if you get it at the right price, this thing could potentially bounce and then have all this upside. Okay, you get this thing on a bounce. I mean, that's what it did back in March. It bounced at 66 and it basically peaked back up at 87. That is over $20 per share. So if you can get that kind of move on this one, it could be a capital appreciation play for you as well. So I think there's a setup here, and it's an interesting stock. I can see why it got recommended so many times on my feed. Hopefully you guys enjoyed this video. A little bit different take. Hopefully it brought you some value. Leave me a comment down below what you think as well. Love to hear from you. Good luck with your investments.